Hey guys, welcome back to the channel. My name is Sharlene Gumbo if you're seeing me for the first time. So in today's video, I'm going to talk about the basics of investing in the stock market. Last week, I made a video and then I left out stuff about the basics of investing because I didn't want the video to be so long. So in today's video, this video is aimed to help someone who is totally clueless, who doesn't know what this is, and is somehow interested to also start investing on the stock market. I would say people generally tend to invest on the stock market to guard their money against inflation. I've structured this video in such a manner that I'm going to talk about my background personally with investing in the stock market, how I got to learn about the financial markets, type of investments I do have, and then I'm gonna move on to talk about the key terms that you should know about investing in the stock market, the different investment vehicles that are available if you want to invest, and also lastly, how to set up your brokerage account depending with whatever country you are, and the basics that apply to most of the countries anyway. Now, as I always do with most of my financial videos, I need to give a quick disclaimer. I am not a registered financial advisor. I'm just an accountant, and if you need specific advice that's tailored for your own specific needs, you need to inquire with someone who is licensed to do so. Now, without wasting much time, let's get right into the video. My background, or rather my initial introduction to the stock market, I was introduced by my uncle who was investing in the Australian stock market at the time, and he gave me like some study material to read through. That was around the time when I just finished my A-levels, and I remember I was on holiday, so I didn't have anything else better to do, so I just started reading about the stock market. And fast forward to around 2015 when I was doing my attachment, I did my first investment in a unit trust fund from Old Mutual because I was trying to find a place where I can save the money that I was making from my attachments because I wanted to do something else after. I then decided to withdraw the money after some time because life happens, and I wanted to now do the things that I was saving for. So now fast forward to 2020, I then decided that I wanted to open my first tax-free investment account when I was in the UK. And for me, I started investing in index funds because I felt like that was the easiest thing to do for the most part. But I did have like a very small portion of money that I put in individual stocks. So now we'll just jump onto the key terms that you should know when you are still a beginner and just getting started. The first term is, what is a stock exchange? This is just a secondary market where existing shareholders can transact with potential buyers. A share in the ownership of a company. So when a company issues out stocks, these are just basically divided into what they call stocks. As an investor, it will give you an entitlement to receive a profit share in that particular company based on the holding that you have. That profit share that you receive, it's also called a dividend. And if you don't know what a dividend is just simply the profit distribution that is done by a company, let's say at the end of the year or at the end of the quarter. It's at the discretion of the directors. They may choose to say we are going to distribute some money to our shareholders. A few terms that get thrown around as well in like the whole investing space is bullish market or bearish market. What this simply means, if it's a bull market, it means that the market is on an upward trend and the share prices are going up. And if it's in a bearish market, it means that the stock prices are going down. And if you are someone who wants to buy the dip, then you should now sort of like be starting to time and see when maybe the dip will end so that you can buy low and then maybe sell high, hopefully in the future. And the next term to understand or to know is market capitalization. Value of a company according to the stock market. When it comes to also now buying your shares, you now need to engage someone who's called a broker. And a broker's job is to just do like the buying and selling for you. And normally they'll charge you a commission to do so. But nowadays, you don't really need that much human interaction. You don't need to call anyone to say, hey, buy shares for me for this price. It's mostly now done on websites. It can be done in an application, and you just maybe pay some broker fees. They will just charge you that money to your account. Now, moving on to the type of investment vehicles that are available to you if you want to invest in the stock market. Personally, I invest in index funds for the most part. I'm much better because I don't need to do any analysis. I don't need to engage any manager to do like picking off the shares that I need to invest in. I can just simply go on whatever brokerage app or whatever brokerage site that I'm using, and I just pick where it says maybe the top index, top 10 or top 20 index. Or if you are someone who is also investing maybe in the global market, you can look at like the S&P 500, NASDAQ, FTSE 100, whatever you want to do. But for me, I find it to be much better because there's less work that's required on my end. However, the drawbacks that come with investing in an index fund is you really don't quite get the highest return that you could possibly get. The returns will sort of like average out at the end of the year, because there could be some entity which may be having much more higher gains, and then there's another entity which doesn't have the highest amount of gains. So things just tend to sort of like flatten out at the end of the year. On to the second type of investment vehicle that one can use. If you so decide and you feel like you want to get the highest gains, maybe you can look into investing in shares, although against my recommendation. But basically, let's just talk about the advantages that come with investing in specific shares. Now, the first advantage is you do identify an entity which is growing. You can also be able to enjoy the benefits of having bought those individual stocks. However, I think I would advise someone maybe to look into mostly blue chip stocks when you are, if you decide to go the route of stocks, simply means like the market leaders in that particular, in whatever industry that you are choosing to invest in. Just so try and look for the very, very high performing shares that have got a much more better track record. The other advantage of investing in those individual shares, you get like the maximum upside or the maximum potential of making money with that particular share. So what I'm trying to explain is you get to earn money through capital appreciation of that company, as I've explained earlier, and you also get to be able to enjoy the dividends that come with that particular company. So if that company decides that they're going to be doing a profit distribution, then you are in a good position. Now you can get some cash flow as well. Moving on to the disadvantages of investing in individual shares. Number one, the risk. The risk is really high, and you may lose all of your investment if the company that you invested in doesn't do well. So there's just that risk to always guard against. That's why you need to try and be responsible and diversify your portfolio as much as you possibly can. Advantage number two, there's need to do a time investment on your part as the investor. You may need to maybe go through like the financial reports for you to understand how the company is performing. So there's just so much time that needs to go into researching a company before you decide that you want to invest. But if you're just doing it simply basically on your emotions or whatever you just know about the company, then there isn't much that goes into it. But that's not the smartest way to go about it if it's a long-term investment that you are putting so much money into. And then the next type of investment vehicle that's available is unit trusts, which is where I started. So what this simply means is a unit trust is made up of investments pulled in from different people. So there's a money manager who is involved, who gets money from different people. Let's say, for instance, there are 10 people who are starting a unit trust. Each person brings in maybe say $100, and then now at the end of the day, it means that the money manager or the professional has about $1,000. Now you as the investors, you are now trusting that manager to make the right decisions for you as an investor. So now the manager can decide that maybe they'll use 25% of the money to invest in shares, and then maybe they can invest 25% of the money into property. They can invest maybe 25% into bonds, whatever investment that they think is also good. They can even choose to keep the other remaining portion in cash as well. So at the end of the day, the price that's given at the end of the day, which values the unit trust that one would have invested in, which is what you as the investor is now then told to say, from the unit trust that you invested in, you got 2 units or you got 1 unit on the day of investment, and now that 1 unit was $100 at the time of investment, and now at the end of the day or at the end of the month, it's now worth maybe $200, Trusts are really good if you're also a beginner. I also do advise people to use this. You can invest in unit trusts for properties, you can invest in unit trusts for bonds, whatever you want. There's just so many products, you can't even finish all of them. Now moving on to what we call ETFs, or exchange traded funds. These are sort of like unit trusts, but the major difference with these is they are traded on the stock exchange. One can be able to even like buy those in one day and sell them if you are sort of like speculating. Although they tend to have a much more lower return, they are available for you to play around with easily to sort of like help you with the risk diversification. They can maybe track different indices and then pull them into one ETF. For instance, they can track maybe the index for retail, the index for the financial sector, the index for technology, whatever it may be structured, or however they may be structured, and then pull it into one basket, and then now one can be able to buy those on the stock exchange. I hope the difference is clear. If you really can't get it, just quickly Google the difference between unit trusts and ETFs. You can be able to find it in a much more simpler way if I didn't explain it well. Now that you know the basics of investing on the stock market, on what it is, what key terms to remember, maybe you now want to go and set up your brokerage account. I'm gonna talk mostly about two markets, which is basically the ones that I really know about, one in Zimbabwe and in the UK. So in Zimbabwe, what you need to do if you want to set up your account, I'm gonna leave a link below where you can go and set up your account in CTrader, and then you can be able to get access to the ZSE and also the different brokers that you can be able to use. And when it comes to the UK, when I was using a tax-free savings account, which is what I would advise someone to use if you are based in the UK, you can even invest up to a limit of like £20,000, which is like tax-free. And I also do have a link where you can get a free share when you sign up. The share will just eventually hit your account, I think, within a few days. Now that brings us to the end of this video, but I know that it's not really very much comprehensive. I could add more information, but I didn't want the video to be way too long, so I'm gonna do a separate video, a follow-up video on the key financial ratios that one needs to look at if you so decide that you want to invest in individual shares. I'm going to also help you understand how to do your research about how a company is performing against its past history, against the industry, and what news to pay attention to when you are doing your investment decisions as well. So this may help someone maybe without an accounting background, or you do have an accounting background but you're just curious to know what I also have to say about the topic. And lastly, I just want to say thank you to all those who have been subscribing to the channel. My channel has been growing, to be honest, in the past few weeks in a manner that I never imagined, and I just want to say thank you. If you feel like you know someone who may also benefit from these videos, do share these videos. And if you haven't subscribed already, do subscribe to my channel. I feel like there's so much more to come. Just subscribe. You just want to subscribe. You just want to see the growth. Thank you so much for watching. I truly appreciate it, for giving me your time, and I'll see you in the next one.